I think the challenge is maybe the people, 20 years older, sort of late 40s and 50s, where, if you think about when they're, 30, 40 years time, it can't be, these pensions can't be afforded. So what happens then? That's really going to be the challenge.
Well, I suspect we're going deep down to a rabbit hole that may not be of interest to non-U.S. investors. But I think that Social Security, as an example, will become means tested. People who paid into it for 50 years like me won't like the fact that they're going to be excluded from it, having paid into it. But that's what's going to happen. The age will change too. Social Security begins at age 62. We will do what we did in the 70s. In the decade of the 70s, the obligations didn't go away, but the purchasing power of the US dollar fell by 75% over the course of the decade. If you went into the decade of the 70s with a $400 or $500 a month income, you were in relatively good shape. If you came out of the decade with a $400 or $500 a month income, what happened is that on a purchasing power basis, you lost 75% of your purchasing power, which was a very bad thing. We're shaping up to do the same thing in the next 10 years, a substantial deterioration in the purchasing power of US dollar savings and investments. And people need to understand that. The real way that we deal with the net present value of entitlements is reducing them by inflating away their net present value.
Yeah, it's a stealth tax that people feel, but then it's, the politicians don't actually have to say it.
Correct. Correct. An ugly outcome, and one that through savings and investment you can solve on your own behalf, but it isn't something that we're going to be able to solve at all, never mind easily, for society.